Right now, the American tax system is changing faster than most people realize. While millions are busy working, spending, and surviving inflation, the rules that decide how much of their money they keep are being rewritten. Some of these changes look like gifts, some look like protection, and some look harmless until you realize what they will cost you later. If you think taxes are boring, that is exactly why they are so dangerous. And if you want to stay ahead of these changes instead of being surprised by them, make sure you subscribe to Tax Hack Pro so you always know what is really happening to your money. The biggest shift begins with what some politicians proudly called the One Big Beautiful Bill. This law reshaped major parts of the federal tax system. It locked in lower individual income tax rates and kept the corporate tax rate at 21%. Supporters said it would boost growth and help workers. Critics said it favored corporations and high earners. But whether you love it or hate it, it is now part of your financial reality. Under this law, the lower tax rates that were once temporary became permanent. That means the structure you see now is not a trial run. It is the new normal. At the same time, the standard deduction was increased, which means a bigger chunk of your income is protected from taxes before any brackets are applied. This sounds great, and for many people, it is. But there is always a second side to every tax cut. Tax brackets for 2025 and 2026 have also been adjusted upward for inflation. That means the income limits for each bracket move higher, so inflation alone does not quietly push you into a higher tax rate. On paper, that protects your paycheck, but it also hides how much your buying power has really changed. You might feel like you are earning more, but what you can actually afford may not be rising at the same pace. Then there is one of the most talked about ideas in years: no tax on tips. The proposal is simple. If you earn money through tips, that income should not be taxed. Supporters say it would help servers, drivers, and hospitality workers who rely on tips to survive. Critics say it opens the door to abuse, where income gets labeled as tips just to avoid taxes. And while some politicians promise no federal tax on tips, many states still plan to tax that same income at the state level. So a worker could hear "no tax on tips" and still lose a chunk of that money to their state. Another major change is the temporary increase in the SALT deduction cap. SALT stands for state and local taxes. For years, there was a strict limit on how much of your state and local taxes you could deduct from your federal income. That hit people in high-tax states hard. Now that cap has been raised for a limited time. That means some homeowners and high earners in states like California, New York, and New Jersey can deduct more again. But because it is temporary, people are already wondering what happens when it expires. Temporary tax relief has a habit of disappearing right when people get used to it. While these changes were happening quietly, another shift was happening loudly: tariffs. Tariffs are taxes on imported goods, and they are rising fast. At the end of 2024, the effective U.S. tariff rate was around 2.3%. By August 2025, it is estimated to be around 15.8%, and some projections say it could reach 18 to 20%. That is not just a small policy tweak. That is a massive change in how expensive imported goods will be. And even if you never import anything yourself, you still pay for tariffs every time you shop. Companies pass those costs on to you through higher prices. Some of the highest tariff threats are aimed at goods from China, Canada, and Mexico. Certain products are facing tariffs as high as 100 to 200%. That means something that once cost $100 could suddenly cost $200 or $300 before it even reaches a store shelf. Electronics, steel, and pharmaceuticals are some of the biggest targets. Think about that. Phones, laptops, cars, construction materials, medicine. These are not luxury items. They are daily life, and every tariff added is another hidden tax on your spending. So while one side of government talks about tax cuts, the other side quietly adds cost through tariffs. You might save a little on income tax, but lose much more through higher prices. Now let us talk about the tax calendar, because timing is everything. The 2026 filing season, which is for your 2025 taxes, begins on January 26, 2026. That is when the IRS officially starts accepting returns. That date matters, especially for people expecting refunds. The IRS has also already released the 2026 tax brackets for returns that will be filed in 2027. These show more inflation adjustments. For example, the 10% bracket for single filers goes up to about $12,400. Again, that sounds helpful. But remember, inflation adjustments do not make you richer. They just try to stop inflation from quietly making you poorer. Retirement rules are changing too. The contribution limit for 401(k) plans has increased to $24,500 for 2026, up from $23,500 in 2025. That means if you can afford it, you can shield more of your income from current taxes by putting it into retirement. But here is the problem. Most people cannot afford to max out their 401k. So the biggest benefit of these increases often goes to higher earners who already have money to spare. While some people are planning for the future, others are still dealing with the past. The Employee Retention Credit, or ERC, became one of the most abused tax programs in recent history. It was designed to help businesses survive the pandemic, but aggressive marketers pushed it to companies that did not qualify. Now the IRS is heavily cracking down. Most ERC claims filed after April 15, 2025 are being disallowed. That means businesses that were promised free money are now getting letters demanding it back, often with penalties and interest. Some owners are shocked. They trusted the wrong advisor, and now they owe money they already spent. This is one of the biggest lessons in modern tax history. If something sounds too good to be true, the IRS will eventually prove that it is. Another number you should care about is not a tax rate. It is the cost of complexity. The U.S. tax code is so complicated that it is estimated to cost the economy over $536 billion every year just in compliance. Americans spend about 7.1 billion hours filling out forms, gathering documents, and trying to understand rules that keep changing. That is not productivity. That is survival paperwork. Every hour you spend dealing with taxes is an hour you are not earning, learning, or living. Complexity itself has become a hidden tax. At the state level, there is a quiet revolution happening. Many states are moving toward flat taxes. That means instead of progressive systems with many brackets, they use one single rate for everyone. Supporters say it is simple and fair. Critics say it benefits the rich more than the poor. At the same time, states are fighting over who gets to tax remote workers. If you live in one state and work for a company in another, who gets your tax money? This fight is still playing out, especially as remote work becomes normal. There is also growing debate about taxing digital services, like software as a service. Some cities, including Chicago, already tax certain digital products. That means your subscription tools, business software, and online services could slowly become more expensive through local taxes you never see clearly listed. Then there is the biggest debate of all, wealth taxes. Some politicians want to create a special tax on the ultra-wealthy. One proposal talks about a 25% tax on billionaires, including unrealized gains. That means taxing people not just on money they made, but on the value of assets that went up, even if they did not sell them. Supporters say this is the only way to tax extreme wealth. Critics say it would destroy investment, create massive loopholes, and push money out of the country. No matter where you stand, this debate is not going away. All of these changes connect to one truth. Taxes are not just about numbers, they are about power. They decide who benefits, who pays, who grows, and who struggles. Lower income tax rates sound great, but higher tariffs raise prices. Bigger deductions help some but not others. Retirement limits rise, but most people cannot reach them. Crackdowns protect the system, but hurt people who trusted the wrong advice. Complexity keeps growing, and so does the cost of understanding it. And through all of it, most people are just trying to survive. The system is not designed to be easy. It is designed to be political. Every change reflects someone's interest. Every benefit has a cost somewhere else. The real danger is not paying taxes. The real danger is not understanding them, because the people who understand the system shape it, and the people who do not understand it are shaped by it. The question is not whether taxes will affect your life. They already do. The question is whether you will understand what is happening to your money or just feel it disappearing. And if you want clear, simple breakdowns of what these changes really mean for you, make sure you subscribe to Tax Hack Pro, because the tax rules you do not understand are always the ones that cost you the most.